Hello and welcome to Inside Infrastructure, an inside look at the decisions and decision makers behind Australia's city-shaping infrastructure. I'm Adrian Dwyer, Chief Executive of Infrastructure Partnerships Australia. Recently, Ilya and I sat down with Mrdak AO. Mike will be well known to most people in the Australian infrastructure sector, having spent over 30 years in senior Australian public service roles, including as a Secretary of the Department of Transport and Infrastructure and Secretary of the Department of Communications. Mike recently left the Australian Public Service and now holds a number of non-exec and advisory positions. It was a great chat, so here it is. Mike Mrdak, welcome to Inside Infrastructure.
Thank you.
We were sort of looking back over your career as we were thinking about how we might kick off the questions for you. And there's a number of senior roles, very senior roles, inside and outside government, a long career in Canberra. I thought it might be best to let you put that in your own words and talk us through the last 3 decades or so of working life.
Well, thank you. And I've been enormously fortunate. I had 32, nearly 33 years with the Australian government through probably one of the most interesting periods of change and reform that has taken place in transport and infrastructure, probably from most of the last century or so. Period of not just technological change, but huge market structure change and quite a lot of governance and ownership change, which has fundamentally resulted in a very different transport infrastructure sector to the one that I started working on. When I joined the then Department of Transport and Communications in the 1980s, for a start, the Commonwealth Government directly ran somewhere around a quarter to a third of Australia's public infrastructure. And the states ran probably, again, at least another half of the public infrastructure in the country. There wasn't a concept of privately run infrastructure in place, apart from some bus operators and one airline that was operating in a commercial market. And the department I joined in the 1980s owned 700 airports, a shipping line, two airlines, a small company called Telecom, which is now Telstra. Everything from the way you mailed a letter to the phone call you made, the flights you caught, not that many Australians flew in the 1980s really, to the way your boxes moved overseas was very much influenced by government. And that was really driven by two things. One is the access to capital. Transport infrastructure is a big capital-intensive business. And right through to the 1970s and 80s, access to capital was a big issue for the sector, and governments around the world tended to run a lot of operations in both transport and infrastructure. What I've seen in the course of my career is a huge shift, and the big shift has been access to capital markets. Private investment has come into infrastructure and transport in a way that we wouldn't have imagined over 30 years ago. We always thought there would be scenarios where the private sector could run infrastructure and transport operations more efficiently. What we hadn't dreamt of was that infrastructure could be financed by the private sector, given its large capital nature and its reliance on often thin revenue streams at times.
You joined as a grad to the department, is that right?
Yeah, I joined as a graduate in 1987. And the first role I had in 1988 was to work on what was then a secret project called the third runway at Sydney Airport, in a small task force. And the end result of that was a highly contentious political process to actually build a parallel runway at Sydney Airport, which led to the resignation of the then aviation minister because the Labor Party policy at that time had been no expansion of Sydney Kingsford Smith. And we started to buy land at a little place called Badgerys Creek in the expectation that one day in the 2050s or 60s, Sydney would need a second airport. And the reason that the Commonwealth owned 700 airports, including Sydney Airport, was that the private sector just didn't have the access to capital, and the aviation industry didn't operate in a fully commercial market. You've got to remember at that time there were two airline policy, which Ansett and those Australian Airlines, they were, and the market was regulated not so much to protect the government-owned airline, but to protect the private sector airline and to enable it to be able to access capital and also to be able to regulate the growth of the sector in a way that would make them sustainable. and Australia had one international airline, Qantas, and probably only a handful of international airlines flew to Australia in those days. So for me, the airports business has been to take that from a time, and I can remember going to and being involved in conversations in the 80s and 90s where the department was looking for relatively small amounts of money to expand Sydney Airport. Little things like I remember going to a cabinet meeting once. We were debating the cost of a door in the customs hall, where we were actually told to go away and not to do it because it was going to cost tens of thousands of dollars to and in that, but it would have made a difference to actually speed up passenger flow. And so government was constrained, and because everything, those days, this was before a lot of the micro reform agenda, we were very much tied to government expenditure and budgets, and it was hard to find money for infrastructure. At the same time, what you had was a transport sector that was really run by the operators. There was no concept really of the customer. And it was a really hard struggle. And the big change I've seen through my experience, and I spent probably the first at least 10 to 12 years of my career with the Commonwealth in the aviation and airports areas, was the big shift was firstly getting rid of the two airlines policy and opening up the markets. Secondly, the privatisation of the airports, which came in the 90s. And most importantly, the national competition policy and also the drive to competition in the industry, which has now resulted in, setting aside the COVID problems, one of the most liberal aviation markets in the world. And you've got to remember, when I started in the department, we had a small team of people whose job was to make sure that the airlines didn't do any discounting. They couldn't compete. There was a team of people which had to make sure that the food on each airline domestically was the same size and quality, so no airline could get a competitive advantage over the other one. And you go to today, where in transport sector we try and promote competition. We look for new ideas. Can you imagine a digital age saying to a lot of the digital companies, well, actually, we're going to sit down and make sure that your product is so much like your competitor, and the government is going to have to approve every change you want to make to your product in the interest of making sure that your industry is viable. That just wouldn't work today. And so that's really the biggest change I've seen as we took the aviation sector from a heavily regulated, heavily government dependent sector into a fully private entity that is actually now raising capital globally. And as I said, setting aside the shock of COVID, we have still one of the most efficient airline sectors in the world because of the way in which Australia opened up its markets and ensured that things like the airport privatisation actually enabled private investment to drive growth in a way that in government we were actually holding back growth.
Did aviation account for probably the largest proportion of, was that just at the start of your career in government, or throughout aviation was the dominant area that you worked on?
It's the dominant area. It's where I spent most of my early career and then kept coming back to it.
So Western Sydney Airport must have been a pretty momentous change for you, looking back through the things that you had contributed to.
Yeah, look, it's the project of which in many ways I'm most proud of, because we changed the argument. We in those days when I first started working on it, as I said, when I remember going out and trying to buy blocks of land off people in the 1980s and 90s for an airport. And we didn't know what we needed the airport for, really, because we all thought the Sydney airport would become capped out. And it has capacity restrictions. But we really didn't have a development idea of what we were going to try and do. Probably the thing I'm most proud of is the work we did in the Joint Aeronautic Aviation Study, which was done jointly between the Commonwealth and the state between 2010 and 2012, which actually laid out the argument that we weren't actually building an airport for its own sake, although Sydney did need a second airport, the second major airport. What we were really driving was a regional development strategy, which was fundamentally changing the shape of Sydney. We looked at it from the perspective of there are, or will be by the middle of the century, 4 million people west of Parramatta, Australia's third largest economy in its own right, and we had to provide the infrastructure, because the one thing that stood out in a lot of my early career was governments lagged very badly on infrastructure provision, largely because of access to funding. And government just couldn't find the funding to actually put into infrastructure. And you can understand why. You only have to see today, the first priority of governments is health and education and defence and all of those other areas. So transport and infrastructure were ranking low and always had been, and the linkage between investing in transport and infrastructure and national productivity weren't as well understood when I started my career.
It's an interesting thing there, particularly with the airport. A couple of things that you've mentioned there, because the airport is being built sort of as a very vision. Like you said, it's supposed to transform the region, and it's being built to be from almost day one a visionary kind of a very substantial piece of infrastructure. There's arguments that are made separately that they should have started effectively with a shed and a runway, just gotten going, and then started collecting revenue and expanded over time. Can you comment on those two approaches and how the government landed on where they did?
Yeah, look, and both are valid approaches, and that was one of the important considerations. What were we building? If we were building an airport to grow with aviation demand, then you would start with a much more basic structure, and that was the plan in the 1990s when the Badgerys project was first started and then stopped. There was going to be a very modest runway with effectively almost no, it wasn't even a tin shed really. What's now important though is that we're actually driving an investment strategy which has already seen a remarkable turnaround in Western Sydney. The reality is the airport is driving demand and is staying ahead of population growth, and is actually changing one of the major issues for Sydney, that we've now created a city that has some of the longest commute times on public transport in the world. It's unsustainable. We've got to get jobs to the west. And the big shift in the last decade is actually to start to see infrastructure like the airport, like the rail lines, like the land development actually driving with having an objective of getting jobs close to people. That's a really fundamental shift.
Well, when you said that the joint aviation study was interesting, is because it recharacterised it not as Sydney's second airport, but Western Sydney's first airport, which is, I know it seems like a nuanced difference, but it dramatically changed the argument. And in my view, there was then followed that was a business and unions joint campaign, sort of in step with ministers that wanted to do the project alongside the Daily Telegraph. And it's a pretty formidable force of unions, business, and the Daily Telegraph saying this needs to be done.
Absolutely, because the debate shifted from being one about how do you add runways to an aviation system, which is important and necessary given the importance of aviation to the country, to actually about addressing some really big social and economic problems for Sydney and the nation. You can't continue to have people having an average commute of 40 to 45 minutes to an hour each way, and you can't have the jobs deficit in an area that has 4 million people that we've created. If you don't start to turn that around, forget about the aviation pressures if you don't have a second airport. Think about the community and economic impacts, and particularly the social impacts of having a large number of people dislocated from work. And that's the danger of where we were heading and will continue to head if we don't build infrastructure into these areas where we're putting housing and enable jobs to connect with where people live. And COVID has really shown the importance of those local jobs and how you can become over-reliant on travel when you have restrictions like COVID.
Mike, I just want to go back briefly to something you mentioned earlier on. You said, I think I got your phrase right, you said that we couldn't have conceived of the private sector being able to provide the capital required to deliver the sorts of infrastructure you're talking about. But it also strikes me that at the time that you were doing these reforms, someone did conceive that. There was someone in your department or elsewhere, or Fred Hilmer or others, that said, actually, there is a different version of the future. I don't know to what extent you could comment on that process of someone taking it from this intensely publicly run system to something which is now regulated to some extent by the public sector, but certainly not run by the public sector.
Oh, yeah, absolutely. We couldn't conceive it at the time because we hadn't done it. But there were people who did and conceive it. There were some, at the time, early in my career, my portfolio was headed by some absolutely brilliant strategic thinkers who I was really fortunate enough to see and work with and learn a lot from. People that were running the portfolio in those days of the 1990s who drove the micro reform agenda, and it was the Graham Evans who was the secretary at the time, in the 80s and 90s. People like Roger Beale, people like of that quality of senior bureaucrats who actually seized the need for both structural reform and also changing the focus from an engineering-driven transport operations perspective to a customer competition perspective to drive economic growth and drive jobs. And that was a fundamental shift. And really, ministers who really made the difference in those days were people, the first minister of my department that I joined was Gareth Evans. And we had a succession of ministers like Gareth Evans, Kim Beazley, obviously, prime ministers like Hawke and Keating, who really championed the need, John Button, people who actually saw a bigger vision that Australia had to change, that markets were going to provide the best opportunities, both for investment, but most importantly for jobs and good quality jobs. And that we couldn't continue in the heavily regulated systems that we had, dependent on government funding. We weren't going to be able to do it. And another example is in an area like, again, rail. Coming back to your other question earlier, what's the other big change I've seen, not only the aviation industry, but rail? I can remember in the 1980s and 1990s, the conversation in Australia was rail was dead. That essentially, apart from some suburban networks bringing people into CBDs, which were chronically underfunded, that the rail system was a 19th century anachronism, that we effectively would spend most of the 20th century, the bulk of the rest of the 20th century and the 21st century, ripping up rail lines and basically continuing an expansion of motorways and private markets in motor vehicles. The big shift has now seen both rail freight, which obviously is always competitive over long distances, but watch the change as we've started to get big cities. The other thing was that we all kept talking to about ourselves as a country which is of small cities or a small population. And I've made the point publicly, you've got to remember that Sydney, Melbourne and Brisbane are not small cities by global standards, and Sydney and Melbourne in particular. So the big shift that I've also seen in my career, as well as opening up these transport modes to greater investment in markets, is this fundamental shift around city shaping and rail, the revitalisation of rail. Now, there's a lot to go, but essentially our cities wouldn't function if we had not changed our thinking on rail. And that's probably the other area I'd say through the course of my career has been a fundamental shift.
What is it that the federal it probably moves us on to the next sort of area of questioning that we were hoping to pick your brain about, which is the federal government's evolving role in infrastructure. We'll get to how it's changed in a bit, but what is it that you think the federal government has done to encourage rail over those 30 years? You've described what they're doing, what's happened in the cities. How is the Commonwealth been involved in that?
Well, again, over the last 30 years, the Commonwealth owned a railway system in the 1980s. The Whitlam government bought the then South Australian and Tasmanian rail systems, and also in the 1980s started to build what was called a national rail freight network. But because that was an area there was a failure. The national rail market was not working, and there was chronic underinvestment. The Commonwealth stepped in through National Rail, but it didn't really work either as a business. And essentially, the shift was to try and take it out of a government-owned railway system, which was chronically inefficient and really just wasn't investing and running well and wasn't serving the market, to a system that actually where the Commonwealth has moved to being a track owner and providing the underlying infrastructure through Australian Rail Track Corporation. And actually that package of actually bringing all of the mainland standard gauge track, which started in the 1990s, and we completed when we did the final deal with Queensland only a few years ago, which means that for the first time in the country's history, we have a single standard gauge rail line operated by a single operator. And now we've also got a single national rail law, which we put in place, is actually a big step. I always say to people, you've got to remember that as in 2000 or 2001, someone running a train between Sydney and Perth operated under, I think it was 48 separate pieces of legislation, 8 or 9 different communication systems, and that the first time a train could run between Melbourne and Adelaide without changing bogies was 1998, 1999. So, not that long ago, when we standardised the rail line between Melbourne and Adelaide. So rail, and if you think about that as one of the Federation's key objectives way back in the 1890s, was to get the rail system to align. It took us a century to get to that situation. And so the federal government, coming back to your question, where's the federal government role? Some of it is direct investment, such as what we're doing through AR2C. Some of it is creating the right structures for people to invest in. So separating out the track from the operators has allowed private sector investment in above rail operators, which has brought efficiency and competition. And thirdly, it sets the market competition rules. Through the ACCC, it enables track access regimes to be put in place. So those three things is where the Commonwealth government has proven to be very successful. Sometimes it's got to put its own money in, but just as often it's about how its GBEs and its structure works, particularly on the infrastructure side. And thirdly, about the regulatory structures. And right across the transport modes, people often talk about the investment, but often the regulatory reform and creating the right regulatory structures with incentives for investment. I mean, selling the airports wasn't the radical reform. The big reform that ensured that our airports have been as successful as they are, albeit in difficult times at the moment, was actually the Airports Act and the regulatory regime, which created a pricing regime which gave them incentives to invest and an incentive to negotiate commercial prices with the airlines and their customers. That regulatory reform is the critical thing.
Can you explain those coming from a different angle? What would you say is the biggest role, is the most important role today, given that there's plenty of capital everywhere? The states have taken the states are responsible for most infrastructure ownership, or the private sector is. What would you say is the Commonwealth's most important role today and going forward in enabling better infrastructure delivery and operation and access in Australia?
Well, I think it's not too different to what was done previously. Firstly, there does need to be Commonwealth investment. You can't shy away from that. There are projects that are just not going to work for the private sector, and things like rail track are one of those areas. The returns just aren't there.
Do you think that's the case? Because there's a striking difference with, you spoke about the airports under private ownership and the ARTC, which is notionally commercial, but obviously under public ownership. Do you think it's just the case that we're not at that point on the maturity curve where it could be a privately owned and financed operation?
I think that's right, simply because the above rail operators aren't as viable as they need to be to create a competitive market, to provide the revenue streams you need, to provide the returns you need. Yeah. The reality is, where rail is not at the stage, when we sold the airports, they were in reasonable capital condition, and the new owners were able to invest on top of it because they were starting from a reasonable capital base. The rail sector is still trying to recover effectively 40 or 50 years of underinvestment. And so that takes time, and the rates of return available to the ARTC are still lower than what a private sector investor, albeit today, private sector is seeking lower returns than what we would imagine even a short time ago. The reality is sectors like rail do still struggle to provide that level. There will come a point at which that is a viable option, provided you get the regulatory regime right. Often the big reforms are the regulatory structures and pricing. It's not necessarily the investment. Although getting the investment, as we've discussed a number of times, getting the investment in the right places in a timely way matters, and to the right quality. But pricing matters, and you can see that in telecommunications, you can see it in rail, you can see it in energy, that you've got to get the infrastructure pricing and regulatory structures right, and then you'll get the private investment taking place.
Is there that level of investment that the Commonwealth puts into infrastructure, that is a relatively recent phenomenon that I think started probably post GFC. That's just a mountain,
particularly urban rail.
Particularly urban rail. Do you think that's is it appropriate for the Commonwealth to be taking over such a large role of investment in what are traditionally state assets, or is there something else that needs to be addressed in terms of because ultimately the Commonwealth has a lot of money and the states don't. Is that what needs to be addressed to resolve that going forward?
Yeah, look, I think there has been there's been a big lift, and there's no doubt about it that people ask the question, did we waste the last boom in terms of infrastructure? Short answer is partly, only partly. We did see a big lift in national infrastructure investment, particularly from the mid 2000s onwards. We saw the big projects. I can remember that the National Highway Program before we changed road funding arrangements in 2004-5 to what became Auslink and is what is now the government's program. The National Highway Program had about $800 million a year to spend across the country. It made it almost impossible to do any project. When you've got to divide 800 million among 6 states and 2 territories across a continent, you've got absolutely no chance of doing any major project. And basically, that's why we had a 40-year vision for the Pacific Highway. It took us 40 years to duplicate the Hume Highway because we were doing it in small pieces, and we just didn't have the bulk. That's where the big changes that started with Auslink in 2004 and really accelerated with nation building with Anthony Albanese in office was starting to apply large amounts of Commonwealth money. That's how you leverage then investment from the states, and also how you actually redesign projects to try and get public-private sector money in through public-private partnerships. Because you've got to remember, before 2000, there were very few successful examples of PPPs, apart from a couple of road projects. So there's been a massive shift, and coming back to your question, the Commonwealth does need to invest and needs to invest in large amounts. It's basically because of its access to capital is cheaper than what the states can do, but also we can actually make some national priority decisions and actually get bulk projects together. I've never been a fan of Commonwealth state splits, and I remember debating over the course of my career with colleagues, where are the boundaries between the Commonwealth and the state? I always took the view, who cares who pays the most? Let's get the right project done. And the conversations we had when we first started the Pacific Highway Program in the 1990s, I remember the conversations then with my Treasury and Finance colleagues who said, well, it's a state road. It wasn't on a national highway. We should only contribute, a very small percentage. We were losing, thousands of people a year on the Pacific Highway. How does anyone in public policy have a debate around who should pay a share of the road funding when you're killing literally 30 or 40 people a week on a road?
I'm only playing devil's advocate, but there might be a view that there's a moral hazard there, in that the states won't address their own funding deficiencies if the Commonwealth keeps giving out money at will. And I guess looking at that from the other side, should there be conditions attached to any of these grants from the Commonwealth? Should there be some kind of reform requirement, or do you think the Commonwealth should give the money and let the states deal with their own reforms as they can?
No, look, starting with the second part of that. Firstly, I think that, and it's always been the case, the Commonwealth has put conditions on its funding. Sometimes not sensible, but most times because we were trying to drive a national outcome. For instance, a lot of the money that went into urban rail over the last decade was conditioned on single national regulators, single pieces of national regulatory reform, as well as improvements to transit outcomes. So there will always be conditions, and that's important because a national government working with the states, and look, a lot of the expertise sits with the states. I never took the view that the Commonwealth should come in over the top of them. You've got to work with states. And on the whole, one of the things I was really most proud of in my time as Transport Secretary was we had a really effective COAG senior officials team that actually worked together. And I was really fortunate. I had people like Tim Reardon, Neil Scales, who are currently in senior roles still, Jim Betts, who's still in a senior role. And so we worked together over a decade ago to pull a lot of this stuff together, and it was a wonderful environment to do it. But the Commonwealth had the money and they had the ideas, and we worked together well. Coming back to your first question around the moral hazard, look, it's the same taxpayer, it's the same nation. As we've seen through COVID, the Australian community got over state boundaries a long time ago. Northern New South Wales operates as part of the Southeast Queensland economy, and we should treat this as a national economy. And essentially, my view has always been who is the best place to fund and who is best placed to deliver, is the question, not what is a share of funding, because I think that's the more important thing.
I'd say some context to add to Ilya's question, and I'm going to answer Ilya's question, which is, yes, the Commonwealth's an important catalytic investor, but the Commonwealth's infrastructure programme is, depending on which figures you take, something like $100 billion over 10 years. So $10 billion a year. New South Wales alone is spending something like $107 billion over 4 years. The Commonwealth is still and then plus you have Victoria and Queensland and other substantial investment as well. So the Commonwealth is still a minority funder of national infrastructure.
It is, and that's the important thing to remember, that the debate over splits on projects was nonsensical, because the Commonwealth's not a big spender, but where the Commonwealth is important is it stands behind the states in terms of their borrowings and also their other revenue streams. That's the important part from a national sovereignty perspective and investment, that the states can leverage their balance sheets, albeit you don't want to create the moral hazards of states over-borrowing, and we've seen that in the past with states like Victoria and South Australia. But ultimately, the Commonwealth takes responsibility for the national economic picture, and while it might not explicitly fund a project, it does stand behind the jurisdictions. And so the Commonwealth has to be involved in the planning sense from that perspective.
Those conditions that are placed on the dollars that are given out by the Commonwealth to the jurisdictions, I accept that some of them have at least driven the thrust of reforms that are given as a quid pro quo. But to what extent do you think they've been effective, perhaps outside of the national competition policy payments piece, but the more grant-based conditions, to what extent are they effective?
Oh, look, it varies. I think some of them are really meeting Commonwealth accountability requirements around acquittal of the monies and the like. But some of them, for instance, we wouldn't have got, as I said, we wouldn't have got national heavy vehicle or rail regulation reform on a national basis without it being tied to money, and national maritime regulatory reform. They were hard conversations, and I don't doubt that the states wouldn't have got those or national competition changes in the absence of Commonwealth tying money to those conditions. The states have a much harder job than the Commonwealth, because they're at the interface. They're talking to the unions, they're talking to the employees, a lot of these state enterprises that were corporatised and privatised. So they're at the cutting edge, and it's really hard conversation for them politically in the absence of the Commonwealth stick or carrot, which is actually there to provide the financial incentives. And I fully appreciate that a lot of states did reform in the 1990s and 2000s because the Commonwealth was driving them and pressuring them. And they all look back now and say that was hard. And in the absence of being able to say we have to do this because the Commonwealth is driving us, was an important lever for a lot of state governments to actually push through reform through their parliaments.
Where do you think are the opportunities for that today? And I'm going to ask the same question in a slightly different way. The huge and it's the new normal of infrastructure investment levels. It's enormous and unprecedented, but it is the new normal, and the OPEX liability that states are variously going to be looking at over the next 10 years is just as enormous, unless they go and implement some of those reforms. Do you think there's an opportunity there for the Commonwealth to add a bit of a, well, I don't know if you'd call it a carrot or a stick, but attach a condition that requires some of those reforms that might help them with those OPEX challenges in this next round of infrastructure investment from the Commonwealth?
Look, I think there remains that. I think there's a number of states are going to have to, particularly given the fiscal circumstances governments are going to come out of COVID with, I think they're going to have to look closely at some of their operating costs of their systems. The public
and
transport
funding as well.
And funding, and some of that may well come to, have they got the market structures right? Is there a way in which they can, through a combination of opening up competition or franchising out services, or ultimately even selling some of those services that they're currently operating, are going to have to be on the table, I think, because the reality is the growth in demand. Now, public transport demand is obviously down considerably now through this period we're living through. But I think that it will come back. Our cities will continue to grow, and we're going to have to look at some of our models. And there's a whole new generation of transport systems emerging, as well as what's happening digitally in terms of our cities. You only have to see the growing interest in unmanned aerial vehicles, the growing linkage, the digital linkages are now taking place which facilitate all that, to see that there's new markets emerging. And you've got to get those market structures right quite early. And so all of those things, I think, do lend themselves to a re-examination of, and I think all governments are going to have to look at public transport in the wake of what we're now living through, because the business model that we went into COVID with was not sustainable, and it's certainly not going to be sustainable beyond COVID.
So will they do it though?
I don't know whether they'll do it, but I think it's one of those things that until you do the diagnosis and you actually run the prescriptions past people, you don't know. And I don't know whether they'll do it, but I think you've got to ask. I think it should be done.
Yeah.
Mike, it's a nice segue, the bits you spoke about there around the digital piece and the changing nature of demand, where a few months ago demand was for public transport seats and capacity, and now the demand is for internet bandwidth so that we can do things like this digitally rather than face to face. The latter part of your career, of course, was running the communications department. Sorry, I should say the latter part of your career to date was running the communications department, and some of your non-exec roles now are in the communications space. I wonder if before we get into the weeds on it, I wonder if you could just reflect for a moment on whether or not anything that's happening now in the knowledge economy would have been even remotely possible 5 years ago, or 10 years ago, given the state of Australia's telecommunications infrastructure then versus now.
No, look, in my view, if we hadn't have invested in the NBN, and if the telcos hadn't built the mobile broadband networks they have, then all of us and just about everyone who works in white collar, clerical, retail, professional services would be on JobKeeper. That's the reality, because the whole economy would have shut. We mightn't have shut for as long, but we all would have been effectively, as we saw around Easter this year, Australia would have been in lockdown, and all of us would have been, the whole economy would be on JobKeeper. So I'm firmly of the view that digital investment, both in the infrastructure, but also obviously packages, like the software developers have developed around the infrastructure, like the Zooms and the Teams and all of those various communications forms, have made the huge difference that we've been able to continue to operate. And it will be one of the factors, and I'm an optimist, and as I keep saying to people, you've got to be, having spent 33 years in public policy, but I'm an optimist that we will come out of this COVID period faster than a lot of places because we are better digitally connected. We won't come out as fast as some countries.
Is there anything you need to disclose there, Mike?
No, I should disclose that I am the chair of a small Japanese telecommunications company called NEC, which has been around for about 100 years and 50 years in Australia, and it's a very good company. But setting that aside, no, the reality is that we will come out of COVID faster and in better shape than a lot of countries, and certainly better than we would have done 5 years ago or 10 years ago because of our digital investment. The challenge for us now is the next generation of investment, making sure that NBN and the 5G networks actually invest in the next generation is actually going to be the critical enablers for the economy, in the same way that aviation and public transport have driven so much economic growth and change and social growth over the last 2 decades.
So talk us through the market structure that will allow that to happen. Once I'm cognizant of, we had to build the NBN because to some extent the way that we structured the sale, or Australia structured the sale of Telstra as a vertically integrated monopoly, wasn't conducive to the type of build out and investment that was required. What have we got the structure right now, or is more needed?
I think the structure is better. There's no doubt. I think Telstra themselves would admit that they didn't handle the process well, and the decision to. I think everyone in many ways regrets the decision to have to build the NBN, but we did, and thank goodness we did. Because it has enabled a level of competition in fixed line which would not have otherwise happened, and it's raised the level of investment, both public and private, which had to happen. The governance going forward, though, is going to be quite critical. Again, a bit like rail, the returns on NBN to get the broader economic benefits are going to be lower than what the private sector would want if it's going to continue to invest in high quality fibre and upgrades to the network. So there's a really big question for government in the next few years, Commonwealth predominantly, and state in terms of planning laws. Who is a bit like rail? What's the market going to look like that sits above the network? How do you get the right incentive structures for network operators to build the mobile capacity we want in 5G and subsequent Gs? And just as importantly, how do you continue to invest in the fixed line network, which really is the core and the backbone of all of the mobile networks? People forget that in the absence of the NBN network, there would be no mobile networks because the fibre is actually connecting a lot of that, and NBN has built the missing links of all of that fibre network, which gives us the mobile coverage.
So they're good questions, Mike. If Mike Murdoch was king for a day, what would be the answer?
I think the Australian government has to put more equity and allow NBN to borrow, as they've already done. NBN's recently done a $6 billion capital raising on the debt market. I think they're going to continue to need to run that as a government business for a while longer, and go back and examine, but build a much more open and transparent and longer term investment strategy, which is known to everyone. Upgrade the system. When I started in the communications department a couple of years ago, the Bureau of Communications Economics still estimated that the average Australian household needed a line speed of around 18 to 26 megabits per second. 3 months ago, they revised that report and saying that most households by 2030s need 54 megabits per second. Our digital utilisation is doubling every year. So the reality is we have to invest, and I think there's no alternative at the moment, given the returns available to the NBN, and importantly as we start to see the telcos roll out their 5G networks. The government needs a 10-year investment strategy for NBN, and I think Stephen Rue and NBN's got that. And the government's going to have to find the means of providing the capital, either through equity or enabling the company to raise funds. And the government's going to have to work out a pricing strategy around NBN, which is more sustainable. And in doing all of that, it's going to have to go back and effectively reinvest and overbuild some of the network that's been built to now and upgrade it. Because the reality is we need it.
On the bandwidth thing, I remember having a conversation with Iñaki Barroeta, Vodafone TPG, and he was talking about that additional bandwidth and some of those numbers on what's required. And then he reflected on it and said, but most of that additional bandwidth is being taken by Netflix, YouTube, and other sort of higher definition services. And the lower latency is really important for gamers, but not many other people. Is 54 megabits per second just sort of nice to have? And is there a limit on how HD you can get something?
Look, it's more than I think what COVID is showing is it's more than it's nice to have. Most Australian households came to realise somewhere about March or April that their digital connectivity was more than entertainment. It was about how they did homeschooling. It was about how they did their shopping. It's how they connected to their family and friends. And then we suddenly discovered we were working from home, and so it's more than that. And I think that experience has shown us that we do need to invest, and it's shown us two things. One is, thank goodness we had the capacity to be able to do that quickly. Secondly, it's also shown us that some parts of Australia don't have that capacity they already need. They don't. There's still parts of Australia that are struggling to get 25 meg through fixed wireless. That has to be upgraded. You can't create a digital divide in this country if we're going to have so much more of our business moving digital, which is what's happening. You only have to see one of the big structural changes.
What's 5G's role in that, Mike? And I'm conscious that you might, with your NEC hat on, it might be somewhat difficult to answer that question. But is 5G a complement to the NBN's business model? Is 5G going to fill some of those holes, or is 5G going to challenge the business model?
I think it'll do all three things. One, for a lot of people, it'll be an alternative model. because it'll provide for them the mobility they want, and it'll provide the services in areas for which their NBN fixed line doesn't give them that capacity. So for some people, depending on how wide the coverage of 5G is, but the nature of 5G and the investment required means that it will be predominantly in some heavily dense areas which are more affluent and able to pay the cost of 5G.
And those are the areas that are supposed to be responsible for a lot of the revenue. They're the most profitable areas for NBN as well.
They are, that's right, and they're tapping those. But the question for all of that is NBN has a responsibility to provide digital connectivity to a certain standard to the whole nation. We're the first country in the world that has set a 25 meg requirement for every household and every business, and that'll go up. You got to remember that for all of the criticism, some of it justified about how we got to where we are on the NBN, the reality is not only have we shown we need it, had we not made that decision to be the first continent that's wired up, we would have found significant parts of Australia who wouldn't have been able to work from home, who wouldn't have been able to do home learning at a time when they needed it in a crisis. And also the way in which business is changing its marketing delivery models, and the way in which retail is shifting, we will see more and more people shifting their business models to going digital. Most Australians will do that seamlessly because they're living in urban areas. But if you're on the outer metropolitan fringes or you're in regional Australia, we need to wire them up as well. We can't create a digital divide. So that's a long-winded way of saying, in my view, the NBN as a social network, an economic network, is going to be important, and 5G will complement that in some areas. It will exceed NBN's capability in other areas, and in other areas it won't go there, and NBN will be the only provider of a broadband capability.
But so what does that mean for the intention to, sorry, Adrian, but what does that mean for the intention to privatise it? I agree with you. It is an absolute social need in a whole bunch of areas that can't necessarily be provided commercially. But if 5G is going to be operating in the areas that are supposed to be the NBN's most profitable, is there any chance that it can be privatised?
Oh, look, there will be buyers, and look, the reality is NBN is a very well run company, and there would be no shortage of investors who'd be looking to buy into NBN. Probably not at the price some in government would like, but the reality is it's going to be a trade off. It's going to be one of those big public policy decisions. When do you sell NBN? Who do you sell it to? And the mistake that was made with Telstra, which shouldn't be repeated, is that you have to set performance expectations and an investment pathway for the buyers. Don't come in after you've sold the asset and tell someone like the board of Telstra that we want you to upgrade to this technology when they didn't buy the business on that basis. You've got to set those expectations early. So, the Australian government has got to set up the big challenge with NBN. As I said, come back to my earlier comments, the success of privatising airports wasn't the sale, it was the regulatory structure which sits over the top of it. Similarly with NBN will be the same. Getting the performance expectations and the investment pathway right up front, even if that means very much a lower sale value, because this is going to be such a critical backbone for this coming century in terms of Australia's economic development, let alone our social connectivity. So my view, for what it's worth, as a private citizen these days is, which probably not too different to the advice I was giving when I wasn't a private citizen, which may account for why I'm no longer there. But my view is that my view is that there will be at the right time to sell NBN because the government cannot continue to find the capital for the expansion. But before you get there, work out exactly what. Don't repeat the mistakes of the past. Work out your regulatory structures. Work out your pricing structures. Work out what your investment pathway you want for this entity with the whole range of industry players, and then you take it to market once you've got all that sorted. That means it's a longer process than I think some would imagine, but that's where we're going to get the best return for the somewhat $50 billion already or so of our great-grandkids' money we've spent so far on the NBN.
Mike, there's a few different threads in your career that come together through NBN, because we spoke about the work around airports, the work around freight, and now you've spoken about NBN or just the accelerating digital nature of business. And I don't know if your house is the same as mine, but there's barely a day goes by when there's not a package turning up that's come through a an online purchase and a freight system to the front door. Do you think that we might find, because of that shift to digital, that actually our freight systems, air freight, land freight, etc., just simply aren't yet well placed to keep up with that shift?
I think the freight networks are remarkably handling it okay. I mean, some clearly Australia Post, which has seen an almost exponential growth in its parcel business, is struggled, not just because of COVID, but simply to get the redesign of its business. Australia Post is essentially a very good parcels business, which also has an obligation to deliver letters every day, which is where it loses money. But the network was designed around letters. So it's got a fundamental business redesign to take place. But the freight companies are working through this, and we're about to see the next generation of this, and whether it's drone deliveries or quite different arrangements around freight deliveries, that'll happen. The disconnects are really, again, around some of the bigger logistics pieces. It's logistics centres. It's still some of those regulatory issues about getting the rail and air freight and road network restrictions lifted. They're still there. The reality that, Sydney, when Western Sydney Airport opens, it will make a dramatic change to our air freight system, because at the moment, the air freight market shuts down at night down the east coast. Brisbane and Melbourne operate 24/7. Sydney doesn't. When you've got 40% of the national GDP sitting in the Sydney basin and you can't move a lot of freight at night, it shuts down your whole system. At the moment, what's happening is a lot of that freight is operating it's had to operate in different times of the day in less optimal solutions. But then you get the curfews over trucks and trains as well taking place in urban areas. So you've got a whole range, and they're not illegitimate concerns by the community, but it changes your ability to respond to market changes and to get the dynamics of the industry. Some of that's the next generation of regulatory change, and some of that will come through new technology, as it will through looking at areas such as delivery models.
But it comes with disruption as well. So just on the Australia Post, we got a notification through the letterbox a couple of weeks ago saying that we'll now, and I think until September next year, we'll be having deliveries only every other day of letters, so that Australia Post can reorient resources towards parcels. And I don't care. That's great. I mean, there's no one ever sends me anything through the post that's time critical. If it's time critical, it comes via email these days. So it's absolutely appropriate that should change. But it took COVID to accelerate and cause a reason or an excuse for Australia Post to take what I think would have been seen as a really big controversial step in the past. I guess my flow-on question from that soliloquy is, what other reforms what other reforms can COVID be used to accelerate that should have happened anyway across all of the areas of your interest?
And that's an excellent bow, by the way, Adrian, that you've drawn.
That was an arc of stunning proportions.
Came back to our earlier conversation, I think COVID will force us to relook at some of the public transport models and pricing, and things like transport pricing will come back into having to be considered. We've all spent lots of hours arguing the merits of things like proper road pricing. The reality is there's no easy time to do it, but there is a time to do it. And I think the times ahead as we come out of COVID probably is the right time to go back and look at some of those dynamics. Can we come up with smarter models? The digital connectivity now enables us to do pricing in a way which we wouldn't have thought of even 5 years ago. Most Australians are doing it in every other part of their lives, but somehow in transport we don't seem to be able to come to that mechanism, even though, as we all know, most Australians would be better off with a direct charging regime on motoring than they would in the current system, where they're paying large upfront registration and then low variable costs or fuel excise.
How do we do that, Mike? This show has more or less become the land tax and road pricing show. We discuss that on every episode, and we always it's always, everyone knows and everyone agrees that's what we need to do. What's the implementation pathway? How do we do it?
Look, I think that some of the work, and the IPA and others have done is already highlighted. You start with some of the segments of the market we're transitioning to. There's no point trying to ask, someone who lives in regional Australia who drives long distances, in country Australia to start paying a road user charge at the moment. But let's start with the EVs. Let's start with the vehicles that aren't paying fuel tax. Modest as they are at the moment, start to charge them on a per kilometre basis or a time distance model. Start to introduce those at those points right up front. When you buy the EV, when you buy the vehicle, here is your pricing structure. You're going to be charged a very notional, $10 registration charge, and here's what you're going to pay per kilometre. Suddenly the dynamics change, because at the moment, if you're buying an EV, you're paying, depending on which jurisdiction you're in, you can be paying $400 to $600 upfront in registration. Given the distances travelled, the dynamics may actually be in their favour if they're actually paying a per kilometre charge. So there's some benefit, but what you're doing is starting to institute. The reality is we are going to see more alternative powered vehicles. Start the transition now, and then come back through other mechanisms to existing motorists and be saying, well, we can actually change this fundamentally for you, reduce the upfront cost, change it to this, and most motorists will be better off. The big risk, of course, is government revenue through fuel excise, but the reality is you've got to start to make some of those market structural changes to actually get the efficiencies and also start to influence your demand patterns in a way that in the long term you will. So I think that's where I'd be starting, and that's where a lot of the thinking has gone.
For a long time, the discussion was around heavy vehicles being that kind of wedge through which to introduce any kind of road price. Is that ship sailed?
No, I think it's still there. What we were trying to do when I was involved was to give the heavy vehicle industry an incentive through additional weights and access, which would have, in their view, given them something for moving to a different funding model, because they could actually see. In that situation, where that's really founded is not so much been the resistance of the industry to pay a per kilometre charge. It's actually been the willingness of state jurisdictions to actually give them access to higher mass and access to a greater road network because of limitations on the infrastructure. And ultimately, heavy vehicle charging is really dependent on where the funds go. If it's being raised by the Commonwealth through mass distance charging, how do you get it back to the road owner, who in a lot of cases is local government, to spend back on the roads? That conundrum was never settled and hasn't been to date, but that's the missing piece. Road pricing ultimately is going to require a Commonwealth state financial deal.
For the electric vehicle proposal that we've put forward, we've sort of said there's three pathways, but the most likely is actually that one or more states acting together without the Commonwealth, because actually they have all the levers, and if you try and get the Commonwealth involved, whilst that might be nice from a national consistency perspective, it means you have to have an agreement of the all rather than the sort of one or two are prepared to go. Do you think does there have to be a national approach or a state federal relationship on it?
If you try and do on traditional powered vehicles that are raising fuel tax, yes, you'll need the Commonwealth. At the point you're working with the EVs, no, you don't. It can be done on a urban or a jurisdiction basis, quite because the levers there through registration and licensing are with the state governments. You're absolutely right. The only thing that states would want to work together on is registration, to make sure that if vehicles are coming into a jurisdiction, that they're being captured on data systems. So, but that can be done in jurisdiction without the Commonwealth. But once you go into anything which involves fuel tax, vehicles which are currently required to pay fuel tax, then you're going to need the Commonwealth. And ultimately, if it involves the Federation having to come together to share revenue, because small jurisdictions just won't be raising enough, and you get redistribution mechanisms, then you need the Commonwealth. Large states, for all their generosity, have not all been that good about sharing their revenue with smaller jurisdictions often.
I was hoping to see if you could look in your crystal ball. Now that you're outside the tent. Now you're not in government. Who's going to be the first government you reckon that might implement something like this?
I think it would be. I think it will be one either New South Wales or Victoria will be the jurisdictions that around EVs and non-fossil fuel powered vehicles will probably be the ones who'll do it, because they're also trying to. I think they've got agendas around, particularly if you look at some of the targets they've got for sustainability, then they're going to need to go into this area, and they're going to need to generate the funding with different models, because we are going to see an uptake of new generation vehicles. It's happening globally, and we just. I think it'll be one of those two jurisdictions who will probably lead. Queensland's done a lot of thinking on it. and I've got to say to their great credit, but I just don't know whether the politics of Queensland and the nature of the regional politics in Queensland will probably enable the Queensland government to do it. But I think Melbourne and Sydney are probably the two drivers.
Yeah, I'm. So I think I agree. I think plus the ACT, but I also think that I'm probably more optimistic on the politics in somewhere like Queensland, because the reality is electric vehicle uptake will be a largely urban process to begin with, just because of range anxiety and other things. So I think seeing other jurisdictions move first, I think you could see quick followers around the country, because they will see the politics are actually quite good when you're talking about equalising for Tesla drivers and others not paying fuel excise. I think I'm probably optimistic on that front.
Yeah, I would be as well. I think that at the moment the pricing of oil globally is probably not working in the favour of it. But the reality is, so this process may take longer than even optimists like me think, but it will happen. I've got no doubt of it, because inherently it's going to have to. There's going to have to be revenue generation to pay for the road networks and the transport systems, and we're going to have to move to these types of models. The very fact that I carry around a small computer in my pocket every day called my phone, which enables people to charge me for a whole range of things. And increasingly, we're going to move into more contactless travel and contactless access systems with charging done automatically. It's going to happen, and the question is getting that design right now by one of those East Coast jurisdictions.
Moving on from road pricing, because road pricing absolutely is something that as we've discussed, it's inevitable. It has to happen. We just have to figure out how. Are there other key reforms that you either wish you could have overseen over your time, or think now is the time for them?
Look, I think there's going to be a whole range of things that will change and which will emerge as reform areas themselves, coming out of what we now see as there is a fundamental restructuring of the economy and the country taking place. COVID has really accelerated a lot of trends, and as well as being a dramatic shock. I think the shape of our cities and the future of work are going to lead to a whole range of new areas, particularly, as we've discussed, re-examining the whole notion of travel for work. The way in which our transport systems are being geared to moving relatively high volumes in peak hours in and out of CBDs or business areas is changing and will continue to change. So I think where that comes to, I think, is a whole range of new thinking around planning and city shaping, the nature of work and home and where they're located and how that operates. We're seeing quite different shifts already emerging on supply chains and confidence and trust in supply chains. And I think we'll start to see that accelerate. And partly geopolitical with what's happening in parts of the world, but also COVID has been an opportunity for some manufacturers and a shock for a lot of people about what we do and don't make in parts of the world, and how supply chains can be disrupted and how quickly and what the costs are. So I think all of those things will come into play. They're not reform areas per se, but they're going to accentuate areas of thinking which we have to have done. And the other one that I think will also be the case is we've covered digital and how important that digital investment is going to be, but also this whole notion of what is a safe environment. I think we're going to see much more digital access systems, systems which enable people to operate digitally to know who's around them, what's happening. I think those systems. And finally, I think this whole notion of risk in investment. Investors now have had a demand shock. What does that mean for investor appetite for assets, in particularly in transport and infrastructure, which are effectively have got patronage risk to them? And you can certainly see, if I was in the investment community, I'd be looking for more and more assets that are regulated assets as opposed to assets that have a great deal of patronage risk for those very reasons. So they're things that we've been worried about, but I think coming out of COVID and what will be, unfortunately, probably a prolonged economic downturn for many parts of the world, and hopefully not for us, but is probably a re-examination of some of those fundamentals, and probably an acceleration of a structural shift in employment. We've just seen two of our largest employment sectors and two of our largest national income earners decimated. education and aviation and tourism and retail are going through a crisis which no one could have imagined 6 months ago, which has accelerated a whole range of structural problems. And for an industry like tourism and aviation, when is the return point for investors? I haven't answered your question well in terms of reform areas, but what I'm saying is there's a whole range of areas of change that are happening rapidly. And from those, we need to work out where we need to change our current policy settings to actually reflect that. Just as when I started my career, the people who were thinking about this stuff had a view of where we needed to go to, which was about dealing with the problems we saw as we came out of the 70s and 80s. We have to do the same level of thinking and planning for a new environment based on what we now see as the scenarios playing out, which are just like it was in the 70s and 80s. It does involve a structural shift out of certain sectors and investment in new investment patterns. And I think that's, in many ways, the exciting part of the picture, and pretty frightening as all periods of economic restructuring are.
Mike, we've asked all of our guests on this podcast the same question to close, which is, what's your favourite type of infrastructure and why?
Oh, look, I'll go back to where I started my public career. Airports. I've always found them fascinating, and while I've always been a big fan. As a kid, I spent living in the country in New South Wales. I used to love the train. Catching the train to Sydney was as exciting as life ever got. But I like airports. I think that they really are the meeting places for people, and I like the technology. I like the industry.
So is it airports in operation or airports in construction, or?
Oh, both. I like them, but operations. I think one of the saddest things at the moment is to go out to past Sydney Airport and see an airport running with, I think on their busy hour these days, about 5 or 6 aircraft an hour, which is probably great for people who live near the flight path, but it's a tragedy when you think about the social dislocation and economic loss. That when you've got a continent like ours, aviation remains the most efficient way. And if you're like me and grew up in an environment where I never got to step onto an aeroplane until I started work because it was so expensive. The reality is to have seen an industry go from a situation where very few people flew because it was a very expensive industry to a situation where most of our kids these days have flown from a very young age and have been able to experience the world and connect in ways which I could never have imagined growing up. That for me will always be one of the great things I've seen in my life and been fortunate to be part of, is the growth of that industry.
Mike, I think that's a great note to finish on, where we've touched the beginning and end of your time in the public service being aviation and it being your favourite type of infrastructure as well. So thank you very much for taking the time to talk to us today.
Thank you very much.
Thanks, Mike.
Thank you.
That's it for today. Please make sure you subscribe on your favourite podcast platform and leave us a rating or comment on LinkedIn. If you have any guest suggestions, then feel free to send those through. We've certainly appreciated the messages we've been receiving so far. This episode was recorded and edited by Adam Stevens from TAG, PwC Australia's internal media agency. Research was conducted by Linda Bierschen, Brendan Pearce and Michael Blair.